In the last class, I narrated around 6 steps are involving for absorption costing. Out of that, we have completed 4 steps. In this class, I will finish off this 2 last steps under our ore absorptions. So absorption is nothing but based on the previous year. We estimate the cost we spend in the future. If there is any deviation with the actual, you just go for adjusting. That will be coming under this one. How do I treat that will also be studied here, 5 and 6. And you know that we can calculate the overhead recovery rate using the machine hour also. But while calculating the machine hour rate, you have a separate format also, not the method what we have discussed. We have a separate format, so we may go and discuss that one also. So in this class, my focus is to cover this one and this one. Apart from that, exam based some advanced illustrations will finish off. Okay. The first component and second component both are easy only. We'll start with the first component. Okay. Now, I will deal the machine hour rate after. Let me finish off the treatment of under or over absorption. After that, we'll move on to the machine hour rate calculations. Now here, supplementary recovery rate under our over absorption case. The total overhead expenses of the factory. If it is being the expenses, automatically it represents what? Actual expenses. Taking into account the normal working of the factory, overheads were recovered in production at rupees 1.25 per hour. This is what about recovered. Recovered is nothing but absorption. This is what about the overhead recovery rate. Using this overhead recovery rate already absorbed and compared with the actual to find out whether there is any under or over absorption. The actual hours worked being 2,93,104. How would you proceed to close the books of accounts assuming that besides, okay, I will finish up this one. What about the absorption? 2,93,104 hours, amount recovered at the rate of rupees 1.25 per hour. Come on, get me the total value here. Three lakhs. Okay. 66,380. What is the actual cost incurred? 4,46,380. Now, absorption is lower. Then this will be named as what? Under absorption. Under recovered or under absorption. Value being 80,000 rupees. So we found out the under or over absorption here. Step number 5. Step number 6, how I am going to deal this one. Okay, how I am going to deal this one. Under absorption 80,000 rupees. While billing, I intimated based on the estimation only I have given, but actual may be varying. In that case, I will recover it from you. While billing itself, while giving the quotation itself, this is rough information. So 3,66,380 is the rough information. It's going to be compared with the actual. If there is any difference, then we'll settle that later on. How do you proceed to close the books of accounts assuming that besides 7,800 units are produced, which 7,000 were sold, there were 200 equivalent units in work in progress. So, goods sold. How many units sold? 7,000. Finished goods stock, how many units are there? 800. Work in progress stock, we have 200. Assuming that besides 7,800 units produced, this will be the production. This will be the production. Out of the production, 7,000 sold, 800 remains unsold. Besides, apart from that, another 200 equivalent units are in semi-processed form. Equivalent units, maybe 300, 400 units, maybe they. All the units may be processed semi-form. But anyhow, comparing will not be meaningful, right? So, two half-completed material is converted into one fully converted material like, finished material like, so that we can easily compare. Whenever we have semi-processed materials, it's always converted into fully completed form. So then it may be logically good. See, 1,000 rupees is the cost you spend for one finished goods, then you can find out easily cost per unit. 1,000 rupees spent for 2 units, but the level of completion only 50%. How can we calculate? Both the units are processed at 50% only, no? So 0.5 into 2 will be considered as one fully completed units. So semi-processed form will always be converted into equivalent fully completed form, and then calculation will be logical. Now, on investigation, it was found that 50% of the unabsorbed overhead was accounted of increase in the cost of indirect materials and indirect labor. So here 50% may be due to the inflation. 40,000 due to the inflation. Increase in price, inflation. Remaining 50% was due to the factory inefficiency. This is inefficiency. Factory inefficiency. Now tell me. While billing, I told them this is the approximate rate only. If there is a variation, you have to pay me. Now finally, I told him, so the under absorption is 80,000 rupees there, you have to pay me 80,000 rupees additionally. Immediately he will ask for the breakup. Sir, there is an increase in the labor cost as well as material cost, sir. Due to that, 40,000 rupees, sir. Because of my careless mistake, I lost another 40, sir. Then come on, how much you can recover from the customers? 40 or 80. This 40 only recoverable. This 40 cannot be recoverable. This can be debited to the costing P&L account. Abnormal reason. Costing P&L account. This 40 can be recovered to the units. Overall being 8,000 units. For that, it is 40,000 rupees. So 40,000 divided by 8,000. Then for every unit, we'll recover 5 rupees. Okay, the goods is sold, probably you may be the buyer. Okay, already I raised an invoice and recovered the money. Now I told you that 5 rupees is now you have to pay additionally because of the increase in the material. 7,000 into 5, 35,000 rupees you have to pay. That's how I'll recover it from you. And 800 rupees, 800 units remains with us, that value will be inflated by another 5 rupees. How much? 4,000 rupees. Work in progress unit will also be now inflated by another 5 rupees per unit, so 1,000 rupees. This will be now collected from the customer who purchased it by issuing one more supplementary invoice. Already invoice may be raised for the original amount. This is a supplementary invoice also we raised. Now this 400 will be added to the finished goods, and in your balance sheet, finished goods stock is now inflated by 4,000 and work in progress stock is inflated by 1,000. Subsequent period while selling, then I can demand this much amount. That inflated amount can be recoverable from him. This is the logic of overhead under our overall absorption recovery. Clear? So this will be called as supplementary rate due to increase in cost divided by units, 5 rupees. Cost of sales, this will be adjusted to the cost of sales. Finished goods, value of stock increased, work in progress added to the work in progress stock. See, if you are adjusting this, if you are not recovering from the customer, it reduces the profit. If you are inflating the finished goods, closing stock of finished goods is a credit item. If you are showing higher, the value will be increasing. As well as work in progress also be shown in the credit side of the manufacturing account. By increasing the credit side value, P&L profit will be increasing. These two cases, profit will be increased. And this case, if you are not recovering it from the customer, the profit will be decreasing. And the ultimate another 40,000 rupees, no abnormal reason, that abnormal reason, okay, charged to the costing P&L. Clear? Make a note of it. So we'll move to the next illustration. Similar to that. Similar to that. It's very simple illustration. Shall I move to the next one? Now, Sweet Dreams Limited uses historical cost system and absorbs overhead on the basis of predetermined rate. The following data are available. Manufacturing overheads, amount actually spent, absorbed. Naturally, what happens? The difference between these two will be called as under or over absorption. Absorption is lesser, so the value will be called as under absorption. Under absorption means we'll add this value for the cost to recover it from the customers. If it is being the over recovery, you have to adjust the price. You have to refund this, or you can adjust in the subsequent sales. 20,000 rupees. Using two methods of disposal of under absorbed overhead show the implication of the profits of the company under each method. In the very first method is what? The method what we have discussed here. It will be added to the finished goods, stock of finished goods, work in progress and sale. So the overall value of this item being 4,80,000 rupees. This 4,80,000 rupees we calculated based on the amount absorbed, but later on we came to know it is actually 1,70,000. So you have to add another 20,000 rupees with this. Another 20,000 should be added here. So 20,000 rupees you have to inflate from the existing value 4,80,000 rupees. Then come on, tell me what is the percentage you have to add. What's the percentage you are getting? 4.17% or 66. Okay, that's all. You apply that same 4.16667% on this. In the very first case, you can add this money 14,000 rupees with the cost of goods sold, and on 96,000 4.16 4,000 rupees for work in progress 48,000 into this value 2,000 rupees. Okay, these two added to the stock value, no, it increases the stock value, and these are the closing stock. As the value of the closing stock increases, profit also increases. This is based on the thing. Okay, if you are debiting this value in your cost of sales, automatically it reduces the profit. It reduces the profit. Is that clear? Hope you'll be now able to understand. Now, using two methods, this is the first method. The second method is, if this money seems to be insignificant, directly debit to costing P&L. Can be debited to the costing P&L. That's another method. Okay. Or this may be added to the next time overhead. Okay, next financial year, while estimating the next year's cost, this will be a part of the overhead cost, like they can adjust in the later period. Now, we'll move to the last component here, machine hour rate calculations. Before that, let me finish off leftover theories also. So, overhead accounting, the first step is collection, classification, and codification of overheads. All the costs incurred directly not related to the finished goods produced are now grouped. That will be the first process. Later on, allocation, apportionment, and reapportionment of the overheads. Allocation and apportionment will fall under the primary distribution. Reapportionment comes under secondary distribution. Thereafter, you are absorbing the overhead to the product using one of the bases. Actual overhead divided by base. Base could be of six varieties already we have seen. Either material cost, labor cost, or prime cost, or machine hour, or labor hour, even sales unit. Now, what is called predetermined overhead rate, sir? This is what about the actual overhead. Predetermined is nothing but budgeted. That's the difference. Blanket rate is nothing but the overhead for the entire factory divided by total quantum of the base. But multiple overhead rates also be applicable. Overhead for each product or department, corresponding base will be calculated. Okay, you know that actual overhead recovery rate is very simple. Actual overhead divided by the base. The base could be one of the 6 items we have. Predetermined is nothing but based on the estimations will calculate the overhead recovery rate. Blanket and multiple overhead recovery rate. Blanket and multiple overhead recovery rate. We have studied illustration number 9. What is a flaw or fallacy is there? That's how the question was there. So in the 9th question, direct wages being 70, factory overhead being 1,05,000 rupees in total. Overhead divided by the base 1,05,000 divided by 70, 150 is the recovery rate. That's how they have recovered. This is called blanket rate. Blanket rate will give only approximate value. Somebody else food now charged. Somebody else eating is charged in somebody else's head. That's how it happens. So you have to calculate the overhead recovery rate for every department independently. This is called multiple overhead recovery rate. If you are having the options to find out multiple recovery rate, then you have to give the importance for that one first of all. If it is not so, then you can go for the common rate, that is called blanket rate. Blanket rate for the entire factory, same rate, 150%. That's all. Now, bases. All the 6 bases are listed here. Under or over absorption, we have 2 aspects. Calculation of under or over absorption. Second one is accounting. Calculation is very simple. Absorbed one, then actual expenses. Compare and decide whether it is under or over absorption. Accounting, the number 1 being use of supplementary rates and recover that to cost of sales, finished goods, and work in progress that we use predominantly. Or if the value is insignificant, directly transfer to the costing period. Or that entire amount will be part of the overhead in the next year. In the next year, the budgeted overhead being 50,000, under absorption overhead in the previous year 5,000. So the next year budgeted overhead being 55,000. That's how you can proceed the next year. Carry forward to the next period, but usually this is not a recommended model. So predominantly you follow one of the first or last models, not the second. So we have studied all these things. The last one, while calculating various things, machine hour rate, overhead divided by machine hour. In case of machine hour rate, overhead recovery rate, the overhead can be calculated using a specific method. Okay, we'll be studying that one now here. Machine hour rate, right? And overhead behavior you might have already studied. Fixed overhead, variable overhead, semi-variable, all these things we have studied with budgeting, especially flexible budgeting. And some of the overheads are listed, and what basis you will be taking for apportionment also be listed here. You can have the glance over that. Of course, you can guess it easily. In case of light points or switch points or floor area, power, horsepower, repair, that you can easily connect these two very without any trouble. But anyhow, you can have a glance over this. Right. Now let's start with machine hour rate calculation. Yes. Machine hour rate calculation. Find out the total cost you spend for running the machine and divide that by the total number of hours that machine was worked. That's all. That's all. Now, the following annual charges are incurred in respect of a machine in a shop where manual labor is almost nil. So the department has no manual labor, completely we have machines only. As we have only the machines, remember, overhead recovery rate will be taken keeping the machine as the base, machine hour being the base. That's the logically correct. Okay, where the work is done by means of 5 machines, exactly similar type of specification. So 5 machines are there, okay, and all the machines are same type. Machine uses 10 units of power per hour, okay, 10 units of power per hour. Calculate the machine hour rate for the machine for the year. Come on, find out the total cost for running the machine for the year, and then you can find out what is the cost per hour. Now tell me, rent and rates proportional to the floor space occupied for the shop for how many machines? 5 machines. And calculate for per machine. 1 by 5. 1/5 of this will be the cost, 960. Depreciation on each machine, 500 rupees. You no need to adjust this. We are calculating the total cost of running this machine per machine basis per year. Repairs and maintenance for 5 machines, then you have to consider only 1/5 of this. Value being repairs and maintenance, 200 rupees. Then power consumed as per the meter, 5 paise per unit for the shop. For the shop means for the 5 machine. Then per machine, it costs us 600 rupees. Electric charges for light in the shop. For the shop means all the 5 machines put together. Then per machine it costs us 108. And attendant. There are 2 attendants for 5 machines. They are each paid 60 rupees per month. So 60 rupees per month, 2 attendant, 12 months for 5 machines. And for 1 machine, you have to divide this by 5. Come on, tell me. 288. 288. Supervision. For 5 machines in the shop, there is 1 supervisor whose emoluments being 250. So into 12. Okay, 12 months. Divide this by 5. Divide this by 5. 600. You got this value. Sundry supplies such as lubricants, jute, cotton, waste for the shop. For the shop means for all the 5 machines put together. Per machine, it costs us 90. Hire purchase installment payable for the machine, including 300 interest. This is not required. Okay, this is not required because it's the cost of the machine. Capital expenditure. It's not expenses. Capital expenditure. This capital expenditure will not be a part of expenses. Only depreciation of the expenditure will be your part. You purchase the assets for 5,000 rupees. Over the 4 years period, you are going to amortize means every year you are going to debit 1,000 rupees, not that 5,000 rupees. Is that okay? Find out the total cost. $3,346. Now, what about the machine hours? Machine hour information is missing, but 10 units are required to consume. 10 units are consumed per hour, and 5 paise per unit. 5 paise per unit. Then what happens? 10 units per unit, 5 paise means 50 paise will be the power cost per hour. Is that okay? Now you pay how much? 600 rupees per machine per annum. So you divide this by 0.5. This is what about the Power cost per hour. Power cost per hour. Per hour power cost is 50 paise. The total power amount we spent for the whole year for a machine being 600. 600 being divided by 0.5, 1200. So you have to divide this by 1200 machine hours. You'll be getting the machine hour rate here. What's the value you're getting now finally? 2.79. The sum seems to be pretty simple. So most probably they may expect some format here. You classify the costs into two varieties. One is standing cost, another one is machine expenses. Expenses related to the operations of the machine will be separately worked out. Expenses related to the fixed nature will be worked out separately. Okay, now identify that. Rent being fixed, depreciation being related to what? Machine operating. Once the machine is operated, depreciation will be there. Okay. Repairs and maintenance related to the machine operation, power related to the machine operations. Now, leaving that, others will be called as standing charges. Balance will be called operating charges or machine expenses. Machine expenses. Machine expenses usually calculated per hour basis. Standing charges will be calculated in total. Come on, get me the total. 2046. And 1200 machine hours. Then what is the cost per hour? 1.70. But whenever we calculate the machine expenses, you have to calculate only per hour basis. So you have to divide this by number of hours, 1200. So 500 divided by 1200, 0.42. Repairs 0.17, and this will be power consumption being 0.50. Overall value in this case being how much? 1.09. Then overall machine hour rate being 2.79. You will be getting this one. Clear? So you just see the Singar Academy text. The computation of machine hour rate is split into two parts. One is standing charges, and another is machine expenses. If it is clear, text me. Now, we'll move on to the next illustration. A machine shop has 8 identical drilling machines manned by 6 operators. So machines are 8, but operators are 6. The machines cannot be worked without an operator wholly engaged on it. So from this it is very clear. At a time we can operate only 6 machines. The original cost of all the 8 machines works out to 8 lakhs. These particulars are furnished for a 6 months period. These details are for 6 months. Right. And these particulars are for a year. Now, you are required to work out a comprehensive machine hour rate for machine shop. Yes. We'll now start with normal available hours per month being 208 hours. Absenteeism without pay 18. Leave where we have to offer the payment 20. Normal time unavoidable being 10. Okay. So what does it mean here? Employees are paid for how much? Okay. Hours available per month 208 minus absenteeism 18. So 119. This 190 will be considered for the payment. Payment will be there. Minus leave. How many hours lost due to the leave? 20 hours. Right. 20 hours lost. Apart from that, normal idle time is also there. Normal idle time being 10. This will be called as hours worked properly per operator. How many operators we have? For 6 operator, you have to multiply with 6, 5,760. 5,760 operators working for 160 hours properly for the job. Yeah. Now tell me, average rate of wages per day of 8 hours. Wages. Operators' wages. For 8 hours, 20 rupees. Then divide the 20 by 8, 2 rupees 50 paise per hour. How many hours the employees are paid? 190 hours are paid into 6 operator into 2.5 rupees we supposed to pay. 2.5 supposed to be payable per month. Okay, 2000. Okay, for the year into 12. Okay. Okay. In text, I have calculated for 6 months. So, into 6 months. What's the overall operator's wages? 17,100. So, this is nothing but cost for 6 months, semester. Or you can calculate per year. Later on, you can divide the overall hours worked per year. Here, you have to find out the machine hour rate by dividing the total overhead by 6 months machine operated hour time. Production bonus estimated. So you have to add the production bonus with this. Production bonus 15% on this wages. 2565. Value of power consumed 8050. This is a machine cost. Anyhow, I post directly here. Power consumed 8050. Supervision and indirect labor. And indirect labor. Value being 3300. Lighting and electricity. $1,200. This one is completely over. Repairs and maintenance, including consumables, 3% of the value of the machine. Repairs. The value of the machine here being 8 lakhs. Okay. So 8 lakhs on that 3% will be calculated per year. But earlier also we calculated only for the semester, so you have to calculate for half year. 12,000 rupees. And insurance 40, but for half year 20,000 rupees. Depreciation 10% is an original cost, but you have to calculate only for the half year 40,000 rupees. Other sundry expenses. 6,000 rupees. General management expenses allocated. General management expenses allocated. General management expenses. 27,000, 50%. 27,265. Total overhead for the machine shop being 1,37,480. Now find out the machine hours. 5,760. So what is the requirement? You are required to work out the comprehensive machine hour rate for the shop. Okay. This is the cost for 6 operator for 6 months, and this is also 6 operators per month basis, right? Is it per month or we have converted this, right? Converted then, okay. 6 operator for 6 months. So 160 into 60, 6 into 6, right? Isn't it? Okay, 5,760. Now you divide the total overhead divided by this machine hour rate. We have machine hour we calculated. So here finally the machine hour rate in this case being 23.87 per hour. To run this machine for 1 hour, it costs us 23.87. The following are information available as per records of ABC company. A workshop where work is done by means of 5 machines exactly similar type. So 5 machines. Okay. One of the lengthiest illustration like. So all the particulars are there. Requirement. Calculate the machine hour rate in each of the following alternative cases. Machine setup time is productive and power is used during the setting up. And setting up time is unproductive and no power is used. Okay. While setting the machine ready, no. Usually production will not happen. Okay, that's how you can assume. We don't have any production. So once I come to the office machine shop, the very first itself I clean the machines and assemble the parts and make it ready. It takes half an hour time. In that half an hour time, you usually get no output. And while assembling and cleaning and all, you will not usually switch on. Okay, as it's big the machine, you don't switch on the machine and you operate. Sometimes you switch on and then operate. To clean, it should be in operating mode, only then it may be comfortable. In both the cases, you can assume. One is assume it is not considered as productive as well as no power. Another one is assume this is also productive and power is also consumed. The first case is very simple, means this setting up time is forgettable, the very first scenario. We'll now try to solve this illustration. Original cost of the machine. Installation charges should be forming part of this cost. Estimated scrap value being this one. Estimated working life of the machine being 10 years. Okay, 10 years. Now we can calculate the cost per year. Okay, standing charges. Standing charges and machine charges. Machine charges. Depreciation is part of depreciation, repairs, power, fuel, all these things are machine charges like. Okay, so here depreciation. How much is the depreciation? 1 lakh plus 10,000 minus 0.15 scrap divided by 10 years. Divided by 10 years, per machine value will be getting. 9,000. Usually depreciation will be calculated per hour basis. This is per year and we need to know per hour basis also. Is that okay? Machine charges, the variable nature will be calculated using per hour basis. Rest of the things will be calculated per year or per semester or per month. That's your choice. So I'm not aware about the hours here, so I'll just keep it pending as it is. Estimated working weeks for the shop per annum being 50 weeks. Estimated working hours for each machine per week being 44. Okay, 44. Maintenance hours per machine being 200. Okay, maintenance being 200. Okay. So 50 weeks, 44 hours per week. Come on, tell me what's the value you are getting? 2,200. For the maintenance, 200 will go off, so only 2,000 you have. Only 200 you have. 50 weeks, 44 hours per week, 2,200, and 200 will be subtracted for maintenance, 2,000 only. Here setup time 5%, 100 being setup time. In the very first scenario, we will assume that setup time is a normal, productive and also consume the power. In that assumption, you should not subtract this. You have to take only this 2000. 9500 is the depreciation for the 2000 hours. 2000 hours. 4.75. Insurance premium 1% of the original cost. So insurance. Standing charges 1% of the original cost. Original cost being 1 lakh on their 5%, 5,000. 1,000, sorry. 1,000 only, no. Yeah, 1,000. Power consumption per machine 20 units per hour. Power. Clearly stated, it is 20 units per hour. Rate of power per 100 units being 5.570, otherwise 5.7 per unit. Per hour, it consumes 20 units, means 20 into 5.4, sir, 5.7. 114 per hour. Then estimated repairs and maintenance for the shop being 11,400. For the shop means for all the 5 machines put together. So per machine being 11,400 divided by 5. 2,280. Okay. 2,000. Okay. So repairs, they have considered this being machine charges. Sorry. I'll put that here. Repair. 11,400 divided by 5 machines divided by per hour. You have to divide this by 2,000. Ultimate value being 1.14. Clear? Still we have few more items. Yeah. Overhead chargeable to machine being this much. Overhead. 16,260 per half year. So we are calculating per annum. Then you can divide, multiply with 2 times. 2 machines divided by 5. What's the final value? 6,504. General lighting for the shop. Rent and rates for the shop per quarter into 4 quarters in a year. For the shop means for 5 machines, so for per machine divide that by 5. 2,880. 3,600 into 4 quarters divided by 5 machines. Number of general lighting. 1,800 for the shop. So 1,800 into 12 divided by 5 machines. 4,320 lighting. Number of shop supervisors. 2 supervisor salary. Okay. And salary of the supervisor being 300. So I'll put that value here. 300 into 2 supervisor. Monthly payment, so into 12 divided by 5. What's the value? 1,440. Number of attendant. 2 attendant. 240 per week. How many weeks are there? Already we have seen somewhere. 50 weeks into 50 weeks divided by 5. 4,800. This is all about attendance salary. 4,800. And wages of the mechanic. Okay. 190 per month into 12 months divided by 5. 456. Lubricants, cotton, waste, chemicals. Lubricants and other thing. 280. 120 per week into 50 weeks divided by 5. 280. Huh? 1200. 120 into 50 divided by 5. Okay. 1200. Weekly. So this illustration, information given sometimes per week, sometimes per month, sometimes it may be half year, quarter. So you have to be double cautious there. The rest will be in the normal illustrations. Now, come on, find out the total value here. Total standing charges being 22,600. You convert that to per hour by dividing this by 2000. Then I will get 11.30. I add all other machine charges with this. Machine hour rate being 131.19. Final machine hour rate. Final machine hour rate. Clear? Now what happens if the setup time is unproductive and power not consuming? Then this will be 1900. You have to calculate for 1900, that's all. And 22,600 is divided by 1900. What is the machine hour rate? 11.89. 9,500 will be divided by 1900. 22,600 divided by 1900. So here this value being 5 rupees. This will not have any change. And in case of repair, 11,400 divided by 5 into 1900. I think this value being 1.20. So if you are able to subtract, if you are subtracting the setup time from the overall allotted time, then that will be the second calculations. Is that okay? Where we consider the setup time is unproductive, power is not also consumed. Then final value here being 132.09 machine hour rate. Machine hour rate. So we have completed all the conceptual illustrations, even advanced level. Now two pretty different sums asked in the examination. I am going to solve those two here now. Advanced problem question number 1 and 2. Finish off copying this and text me. Now, this question is one of the interesting illustrations. Okay. This illustration is all about secondary distribution. Under secondary distribution, you have three models, right? What are the models you have? Repeated, trial and error method, and simultaneous equation, means reciprocal method. Under reciprocal method, you have three models. You can solve this illustration under all the three models. That's all. E-book is an online book retailer. The company has 4 departments. The 2 sales departments are corporate sales and consumer sales. These are the revenue generating department. There's a revenue. 2 support departments are administrative and human resource accounting and information system. Each of the sales department conducts merchandising and marketing operations independently. The following data are available. Now, the cost incurred in each of the 4 departments are given here. Okay, these are the costs. Now, this is the other information. Now, the company uses number of employees as the basis to allocate administrative cost and processing time as the basis of allocate information system cost. This will be number of employees. This will be process time. And the ratio is also given here. 42, 28, 17, 21. 2 is to 2, 3, 4 and 6, I think, right? 6, 4, 2, 3, 6, 4, 2, 3 ratio. And processing time be 6, 5, 1, okay. I have to reduce this. 12, 10, 2, 7. 12 is to 10 is to 2 is to 7 is the ratio. Requirement. Allocate the support department costs to sales department using direct method. That's the first one. Okay, direct method. I don't want this. Yes. Oh my God. Yeah. Expenses as per primary distribution. Corporate sales, consumer, administrative, information system. Is that okay? The values are this much: 12 lakhs 97,751, 6 lakhs 36,818, 94, 510, 3 lakhs 4,720. I am going to follow direct distribution method. Direct distribution method. I start with administrative expenses. This will be distributed using 6 is to 4 is to 2 is to 3. In this case, direct means other 2 will not be considered. Similarly, in case of IS, 12 is to 10 is to 2 is to 7. Here also, support to the service department will not be considered. Okay. Service department rendered service only to the production department. The cost of the service department is allocated only to the production department under that. Yes. 94,510 is subtracted. Distribute to corporate and consumer sales in the ratio of 6:4. 56,706, 37,804. Similarly here 3,04,720 should be distributed in the ratio of 12:10, otherwise 6:5. 1,66,211, 1,38,509. After the distribution, the value being 15,20,000, 668, 8,13,131. We got the direct distribution model. Okay. Now, first point, last point, allocate the support department costs to sales department using reciprocal allocation method. Second and third later I will solve. In case of reciprocal allocation method, you can take one of the methods, simultaneous equation method or repeated distribution method, as you choose. But I am going to follow simultaneous equation method, reciprocal. Under that simultaneous equation method. Now, in case of admin, I keep this being x. Admin is equal to x. IS is equal to y. X value is equal to 94,510 plus how much is from IS? How much is from IS? From IS to administration, it is 2 bar. I may write it down here. Corporate, consumer, X, Y. Okay. Admin and IS. Here X distributes this way, 6:4:2:3. Y distributes this way, 12:10:2:7. X its own will be removed, Y its own will be removed. You understand? Those things are going to be removed. Any doubts here? And X gets support from Y, how much? From Y to X it is 2 bar 24, 2 bar 24, 2 bar 24 of Y. In case of Y is equal to 3,04,720, how much Y gets from X? 3 out of 13. Okay, 3 by 13th of X. Is that okay? Clear? Solve the equation. I can substitute this value here directly. So X is equal to 94,510 plus 2 bar 24 into Y being 3,04,720 plus 3 bar 13 X. Tell me. You multiply 2 bar 24 inside. Yes, make it faster. What's the value you are getting? 2 bar 24 of 3,04,000. 25,000 393 point. Okay, you round up to the nearest whole number plus 224 into 3 by 13. 2 bar 24 into 3 by 13. I think 0.01922x. Now finally I can solve this for x. X is equal to 1,22,243. You have to add up these two and divide 1 minus this number. 1 minus this number in the denominator. Okay. In case of y, how can you calculate for y? I can substitute here. Okay. 3,04,720 plus 3 by 13 of x. X we have calculated as 1,22,243. Then y in this case is equal to 3,32,922. We should not stop here. We further go for calculating the final one. What's that? Allocate to corporate and consumer sale. Expenses as per primary distribution being these two. 12,97,751. Consumer 6,36,818. Now you have to distribute what? X. X overhead. X means admin. Admin overhead will be distributed. Okay. In what value? 6 bar 13 is to 4 bar 13. It is not 6 bar 4. 6 is to 4. 6 bar 13 and 4 bar 13. So this value. 1,22,243 into 6 bar 13. 56,427 I think. 420. Okay. Rounding of error. No problem. Here 37,614. Rounding of error. No need to worry about further. In case of Y, information system, this will be 12 bar 24 is to 10 bar 24. 12 bar 24 of this value being 1,66,461. Here 1,38,729. Fractional difference, you can omit this. You can skip this. Then final value after the secondary distribution being 15,20,639. 8,13,161. Clear? Rank the support departments based on percentage of their services rendered to the other service support departments. Use this ranking to allocate the support cost based on the step down allocation method. Percentage of their service rendered to the other department. Okay, very interesting question. Let's see here. Come on, tell me. Already told you, no. Corporate, consumer, admin, IS. Where admin supports to corporate how much? 6, 4, 2, 3. IS 12, 10, 2, 7. What is the support by admin to IS? 3 out of, forget about this one, huh? 3 out of 13. And here forget about this one, 2 out of 24. Get me in percentage. Support given by admin to IS, what is the percentage? Percentage 20? 23.07 percentage. What about IS to admin? 2 by 24 in percentage.
8.3.
So from this it is very clear. Okay. Admin gives more support. 23% is supported by admin to IS. In a reciprocal, IS gives support only 8.33. So as per this one, admin will be the topper, IS is the second topper. Otherwise, I assume that admin only supports IS. IS support to admin seems to be insignificant. You no need to reallocate. Admin expenses can be allocated to the production as well as IS, but IS department's overhead will be allocated only to the production department because that's simple. Admin supports 23 and IS supports only 8. You leave that 8, it is insignificant. That's the logic here we have. Now come on, tell me. Corporate, consumer, admin, IS. Expenses as per the primary distribution. Primary distribution 12 lakhs 97,751, 6 lakhs 36,818, 94,510, 3 lakhs 4,720. Expenses as per the primary distribution. Now step or ladder method or step distribution method. I will take the admin first of all. 94,510 is subtracted, will be shared among the other departments 6:4:-3 ratio. Its own will be skipped. 40? Okay, 43,620, 29,080, 21,810. Now you can subtract the IS 12:10:dash. The support by IS to admin is immaterial. We never take this. Now total value being 3,26,530 should be subtracted and distributed to corporate and consumer sales. 1,78,107, 1,48,423. So here the value being 15 lakhs 19,478, 8 lakhs 14,321. Clear? In the next step, how could you have ranked the support departments differently? Is there any possibilities to ranking it differently? Yeah, of course, it is also possible. So, admin to IS being 23.07%, but IS to admin is 8.33%. You think IS is supporting insignificantly, so rank this one first and second. But you can now compare absolute value. 23.07 of admin is for IS. What is the overall value of admin? In that 23.07% is supported to other department. What's the value you are getting? 21,000? 803. And meanwhile, IS supports to the other department 8.33% on this. 25,000. So if you are considering the values, here the significance will be higher for the IS. So rank will be given this way, first rank and second rank. It's not the other way. Like already I told you, my friend gave me a treat for 10 times in the tea shop. And I gave him 4 times in restaurant, lunch. How will I say that? He has contributed more. 10 times he paid the bill, I paid only 4 times bill. But the 10 times bill may be around 100 rupees, but 4 times bill is around almost 1,600 rupees. In the form of value, IS supports more, so you have to allocate the other way. So here, IS will be allocated first of all, 12 is to 10 is to 2 is to dash, and then admin should be allocated. While allocating the admin, 6 is to 4 will be taken. Okay, expenses as per primary distribution. I leave this to be solved by yourself. Clear? Here we are not going to answer this. The question is how could you rank this support department other way? So the other way is also ranked. Now let's move on to the next illustration. So second question, also typical illustration. As a missing data, you have to calculate a lot here. In manufacturing company, factory overheads are charged as a fixed percentage based on direct labor. So the factory overhead recovery rate, okay, being based on the direct labor. So certain percentage on the direct labor. Office overheads are charged in the basis of percentage on the factory cost. Admin overhead. In that factory cost, certain percentage, maybe Y percentage. We have been given direct material, direct labor, sales and profit. Profit details are given. You are required to find out the percentage of the factory overheads on direct cost, labor, percentage of the office overheads on the factory cost. This percentage is missing in this illustration. We try to solve this illustration now. Yes. Direct material 19,000 for A, 15,000 for B. Direct labor 15,000 for A, 25,000 for B. If you add up these two, you'll get the prime cost. 34,000, 40,000. What about the factory overheads, sir? 15,000 X percentage, 25,000 X percentage. Am I right? Direct labor 15,000, on that some X percentage will be factory overhead. Similarly here for 25,000 X percentage will be this one. Is that okay? Now In Singar Academy text, I just divided this by 100. X percentage, no? 5 percentage means 5 by 100. Then automatically 150x will be the answer, 250x will be the answer. 15,000 into probably 10 percentage means this is assumed to be x, 150x. Okay. If I add this, then I will get factory cost. 34,000 plus 150x will be the factory cost. 40,000 plus 250x. 250x will be the factory cost. Admin overhead will be addable here, which is y percentage and the factory cost. Okay, so 34,000 plus 150x multiplied by y percentage. Y percentage, y by 100. Naturally, what happens? You can do this way. 340 plus 3.40 y plus 1.5 xy. 1.5 xy. Is that clear? Similarly here 400x, sorry, y plus 2.5 xy. This final value will be cost of sales. Okay, cost of sales being 34,000 plus 150x plus 340y. Okay, I will do it later on. Is that okay? So if you add up this, with that I have to add the profit to get the sales. In case of product A, sales being 60 and your profit being 25% on cost. If this is being 100, profit being 25 and sales should be 125. This should be 12,000 and this should be 48,000. And in case of product B, sales being 80,000, 25% on the sales price. If the sales being 100, profit being 25 and cost being 75. Do the cross multiplication. So this will be 60, so 20. Cost of sales should be 60. Is that clear? We have now drafted the entire cost sheet here. Now we have to find out the missing data like for X and Y. 34,000 plus 150x plus 340y plus 1.5xy. This one is added to get what? 48,000. Is that clear? These two added to get this value. Similarly, this may be the equation number 1. In case of equation number 2, 40,000 plus 250x plus 400y plus 2.5xy is equal to 60,000. Okay, this 34,000 can be cancelled here, then it becomes 14,000. This can be cancelled as 20,000 rupees. So the new equation being 150x plus 340y plus 1.5xy is equal to 14,000. Here 250x plus 400y plus 2.5xy is equal to 20,000 rupees. Now to cancel this, I can do the cross multiplication, like I can multiply to make this 250, 150, if I multiply with 0.4 for this equation, I will get equal value, right? Is that okay? So equation 2 is multiplied with 0.4. If I do so, then what will I get? 150 into 0.4, 100x. Am I right? Here 160y, here 1.5xy, and here 8,000 rupees. I can now subtract the equation 1 and 3. Oh my god, 0.6, I made a mistake. Okay. 0.6. I had to multiply with 0.6. So 150x plus 240y plus 1.5xy is equivalent to 12,000 rupees. So I cancel this 150x and 150x and 1.5xy and 1.5xy got cancelled. Finally, I'll get what? 340 minus 240, 100y is equivalent to 14,000 minus 12,000, 2,000. Here y is equivalent to 2,000 divided by 100, otherwise 20%. Y being 20%. Now, you can calculate the other way one also. See, if this is being 100, this is 20, and this should be 120. As we know, 120% is being 48,000, then 20% should be how much? You can do the cross multiplication. 1/6. What's the value? 7,000, I think. This is 41,000. Am I right? No. What's the value? 8,000. Okay. 8,000. This value being 40,000 rupees. We got the factory cost. The difference between factory cost and this one being your factory overhead, which is 6,000. 15,000 is the direct labor, factory overhead being this one. So 6,000 divided by 15,000. Then x is equal to 40%. Or you can substitute in one of the equations. I can substitute this value in equation 1. Okay, equation 1 is re-prepared where y is equal to 20%. 150x plus 340 into 0.2 plus 1.5 x into 0.2 is equal to 14,000 into 0.2 being 2,800. This will be how much? 1.5x into 0.2, 0.3x. Am I right? So 0.3x added with 150x this one being, I think somewhere I made a mistake. This is not 0.2, 20%. I had to put 20% here. Okay. Already we have subtracted. No. 20 will be the y. Y value being 20. Y value being 20. It's not 0.2. Okay. Because we have adjusted here. So 150x and this will be 1.5x into 20. 30x. So 150 plus 30x, 180x is equal to 2,800. This value will become how much? 340 into 20. 6,800. This will be 14,000, sorry. Already I got this answer here, so I was very careless here. Okay. Come on, tell me. X is equal to 14,000 minus 6,800. 7,200 divided by 180. You get the same 40. Already I got this value, right? Okay. Hope you'll be now able to understand this one. So direct expenses. So prime cost consists of three items: direct material, direct labor, and direct expenses. Direct expenses is nothing but those expenses not related to these two will be called as direct expenses. Not being material, not being labor will be the direct expenses. Like in case of preparing the table, wood and steel with the direct material, and carpenter wages will be the direct labor. Is that okay? In case, in case any special equipment purchased in rental for this purpose, or small wood carving is done, and for that any carving job charges paid. All these things will be a forming part of the direct expenses. Is that okay? Stitching the shirt, okay, cloth is the direct material, and the tailoring cost is the direct labor. If you want to do the embroidery work, then it will be outsourced by the tailoring shop, where it will be embroidered outside, and a separate charge will be recovered from you. That will be considered as direct expense. Not being the direct material and direct labor will fall in this case. Or expenses relating to the manufacture of a product or rendering services, which can be identified with the cost object other than direct material and direct labor. Related to the final goods we prepared, but not being the direct material and direct labor, will be considered as direct expenses, like royalty charged on production, job charges. Okay, some wood carving is done outsourced. Okay, and higher charges for a specific job. Any expense, plant and machinery you procure in hire for a specific job. I want to do a false ceiling work, and for the false ceiling work, I need a machine, a tool. I procured that in higher purchase by paying, means higher charges, maybe or 1,000 rupees or 1,500 rupees paid. That will also be direct expenses. Special design, drawings for the job, software services specially required for a job, any other specific job related traveling expenses will be grouped into the direct expenses as per CAS number 10. This CAS number 10 is required. The number is very important for the CMA students, not for the CA students. Then what are the conditions you have to consider for treating this being the direct expenses? Traceability to the cost object. It should be traceable. It should be identifiable with the product we manufacture, and it should be material, not being small part. Okay, wood will be the direct material, and carpenter salary will be the direct labor, right? But what happens in case of nail and small screws you use for making the furnitures? Though it may be direct, without which the furniture will not be stable, right? So direct material being 10,000 rupees, direct labor being 5,000 rupees, and you are adding the nail and screw 2 rupees. Seems to be not logically correct. Significance is very lesser. Don't show this separately, sir. Why were this, sir? It's nothing a matter. So if it is being insignificant, though it may be insignificant related to the direct, it will be overhead only, not being the direct item. Similarly, other than direct material and direct labor, it should be identifiable with the goods manufactured, and the value should also be significant to qualify this being the direct expenses. How do you measure this identification of direct expenses? Usually traceable to the product, provided the traceability should be economically feasible manner. Okay, identifying the direct expenses related to the product, and you found out the cost being 5,000 rupees. But to identify that we spent around 3,000 rupees or 4,000 rupees, what's the use at all? To segregate, then we recruited an expert to segregate that value and give me the data properly. And for him, we paid salary 3,000 or 4,000 rupees. After that, we came to know the value is only 4,000. It has no meaning at all. Now, direct expenses determination. Sometimes we may have bought out resources. Sometimes we may have other than bought out resources. Other than bought out. Okay. Some item may be purchased, especially for this job, not being the direct material, direct labor. Then automatically purchase cost can be identified, like cost you spend and carriage in the other expenses related to the machine or asset brought to your bring to your place, and duties, if any, will be addable. Trade discount, rebate, ITC refundable is subtracted. Other than that, like dies and tools produced internally, it is not bought out, it is purchased, it is generated internally. See, we need to prepare a plan, sketches prepared, but rather than buying it from the outside, already we have a team of employees. Now, one of them, he is now able to prepare the sketch. I asked him to prepare. So I'm diverting existing resources apart for this means. Now we have to identify what's the cost for that. So direct material, direct labor, direct expenses, factory overhead, admin overhead related to the works and R&D if traceable. All these things will be addable for dies and tools produced internally. Have you purchased from the outside or internally generated? If it is purchased, then purchase cost. If it is internally generated, making cost will be taken. Making cost is nothing but cost of production. In case of one-time lump sum payment is made for some of the assets like royalty, I paid a royalty 1 crore rupees and I can use this 1 crore rupees royalty payment for doing the business for 3 or 4 years. Then this entire value can be amortized over the 3 or 4 years. Then amortize over the life, like royalty, technical know-how, and drawing fees. Is that clear? And what are the items will be includable in the that expenses? What are the items? Not being material, okay, not material, and being part of overhead, like, okay, these will not be not material, but part of overhead will not be includable. These are going to be excluded. Finance cost, any borrowings for that, if you are paying interest, will be excluded. Imputed cost, notional cost is called imputed cost, right? Owner's fund, capital for that interest is payable, or for the owner's service salaries offered, those things are called imputed cost, not considered here. Abnormal variances, okay, 100 rupees is expected, suddenly the price in the market increased to 105, no problem. But due to some other wastages, it came around 1000 rupees. So 100 becomes 1000 rupees will not be logically correct. That variance will not be considered as that expenses. Penalties or damages paid to the statutory authorities, legal violation will not be addable. And sometimes these items can be deductible. You spend the direct expenses 10 lakh rupees. From there, if you get any subsidy or any amount recovered, any credits will be subtracted. So balance will be your direct expenses cost. Direct expenses are accounted at standard cost only. Record the price and usage variances as direct expenses if not abnormal. Like material variances, we can calculate the variances for the direct expenses also. The same way we can calculate. Okay. Any method you follow, you have to continue to follow the same method year after year, or if it is needed by the law or accounting standard, you can change. Otherwise, you have to follow the same. Clear? And finally, while reporting, you have to disclose these things. What is that? Cost breakup. Okay. And disclosure shall be made only where material, significant, and quantifiable. Only the disclosure is required. Else, disclosure is not required. It may be in the form of a footnote or separate schedule. You can give the details about this one. And if there is any variations, any change in the cost accounting principles and methods, that will also be reported properly. Disclosure. Okay. So with that small theoretical background is over. Now try to find out direct expenses for these illustrations. Calculate direct expenses as per CAS number 10 from the following information. Royalty paid. It is a part of direct expenses. Royalty paid on production, also royalty expenses. Design charges also direct expenses. Machine shop expenses also direct expenses. And software development charges related to the production also direct expenses. So you can add all these things to find out the direct expenses. Is that okay? It's very simple. Total being the direct expenses. Very often this question is asked in the examination carrying 2 marks, like, okay, very simple chapter. Now, second question. Compute the total direct expenses of product X from the following information, giving appropriate explanatory notes. Production in units, sales in units, labor hours 10,000, labor hour rate being 8 rupees. Right. Royalty per unit. Royalty will be the direct expenses. Labor cost will be considered as direct labor, will not be a matter for me. This will be the direct expenses. Royalty per unit of production also direct expenses. Design charges also direct expenses. Interest on loan finance charges will not be taken. Higher charges on equipment used for manufacturing product Y. So we are talking about product X. So this higher charges is for product Y. Yeah, of course it is a direct expenses for product Y, not for this one. And penalty for violating patent. Any legal violation, any payment is there, will not be considered here. So number of units sold here being 16,000. So royalty on sale being 16,000 into 2, 32,000, and royalty on production 10,000, 20,000, right? So 20,000 into 1, 20,000 will be the royalty on production, and design charges being 12,000 rupees. These three put together will be called as direct expenses. Come on. Yeah, 64,000 will be the value. Why do we choose these things with the direct expenses? Why not the others? You have to give the hint also. Labor cost is related to the direct labor. Interest is a finance charge is not considered. That higher charges is the direct expenses only, but for the product Y, not for product X. Penalty for violating any legal case also be not qualified to include in direct expenses. Is that clear? Now, products X, Y, and Z are manufactured by XYZ company. Special permit charges of rupees 12 lakhs are paid for X and renewable every 4 years. How will the permit charges be treated in cost reports? Okay. Yeah, of course, the permit charges will be that expenses only. Once in a how many years it can be used? 4 years, so it can be amortized over the 4 years period. Over the 4 years period. That's all. See, in batch costing, we'll try to finish up the fourth question, and in job costing also we'll try to finish up the last question. This question number 5 and their question number 4th. We try to finish up these two. I think question number 4, not 5. Not 5. Unit or batch costing, I have already covered the first 3 illustrations. The 4th illustration is nothing but preparation of cost sheet. You are going to prepare the cost sheet for every unit separately is called job cost sheet. Preparing for a batch of 100 units or 200 units, then it is considered as batch cost. Anyhow, cost sheet only. We are going to prepare cost sheet only. Come on. Try to solve this illustration. A batch number A100. Batch number A100. Direct material 10,000 and direct labor for department A, for department B, 800 hours at rupees 5, 4,000, 1,400 hours at rupees 6 per hour, 8,400, overall value being 12,400. We have to go for the overheads. Before that, prime cost can be found out. Prime cost being 22,400. Factory overhead. Factory overhead are absorbed on labor hours basis, and the rates are 7 and 4. For department A, 800 hours per hour, overhead being 7, 5,600. For department B, 1,400 hours and 4 rupees per hour, 5,600. Then 11,200 will be the factory overhead. If I add this, then I will get the factory cost. Factory cost in this case be 33,600. The firm uses cost plus system for selling price and expects 15% gross profit, sales value minus factory cost. So, factory cost, sales, the difference between these two is the GP. If the sales is 100, GP is 25 and factory cost is 75. Here we got the factory cost being 33,600. Then you can do the cross multiplication to get the rest. I think it is 44,800. Okay. But anyhow, this is the gross profit. From the gross profit, you have to debit all the administration and selling and distribution expenses usually debited to the P&L account, where the administration overhead being 10% of the selling price. Selling price being 44,800. On that, 10% is being 4,480. Then you will get the cost of production and add the profit, net profit. This value being 38,080. Finally, you will get the sale price. Sale being 44,800. The profit in this case being the missing data, like otherwise 15%. 25% out of that, 10% being the overhead, means net profit should be 15% of the sales. 6,720. Assuming 1,000 units were produced in batch number 100, calculate the selling price. Now, what is the selling price per unit? You have to divide this by the number of units. Yes, of course, 44.8. So, preparing the batch cost sheet is nothing but cost sheet only. Prepare the cost sheet using the absorption costing for a batch of 100 units or 200 units and then find out cost per unit. That's all. Now let's move on to the job cost. Online students, come on, respond me. Yeah. Yes, come on, join with me to solve this illustration. This is also again normal cost sheet. A factory incurred the following expenditure during the year 2022. Okay, we have been given these items. In the year 2023, following changes are expected in production and cost of production. Ascertain the cost of production and selling price. So first we will finish up cost of production for the existing year. Direct materials, direct labor for the year 2022 being 12 lakhs, 7 lakhs respectively, and prime cost being 19 lakhs. Manufacturing overheads, fixed and variable list is there. Factory overhead 6 lakhs 10,000. We have a sub-classification, fixed being 3 lakh 60, variable being 2 lakhs 50. Then cost of production in this case being 25 lakhs 10,000. Right. By adding profit, you will get the sale price, but that information is silent here. And in the subsequent year 2023, there are lots of changes. You have to incorporate those changes and restate this cost sheet for this year. Production will increase due to the recruitment of 60% more workers in the factory. Overall efficiency will decline by 10% on account of recruitment of new workers. You understand? So, you have to pay the wages 60% extra because you have 60% extra employees. But Due to the 60% extra employees, production should also increase 60%, but efficiency decreased. So naturally what happens? You have to add 60%, otherwise into 1.6. But due to the efficiency decrease, you have to subtract this one. So I'll just make a slight arrangements here, correction here. Right. This one I'll calculate later on. Okay. There will be an increase of 20% in fixed cost. Fixed cost increases by 20%, and variable cost increases by 60%. Come on, find out the fixed cost. 360 plus 20%, 4,32,000. Variable cost being 250 plus 60%, 4 lakhs. There are two assumptions here. Just similar to the direct material, this will also be assumed. Another one is a flat rate 60% is increase. That way also you can assume. The cost of direct material will be decreased by 6%. Okay, see here. Existing production being 100, increase in employees by 60%, your production will increase by 60, otherwise 160 units. Earlier 100 units means now you can produce 160. But the efficiency of the employees decreases by 10%, so 16. So ultimately 144 will be the real production. Assumed, this is what about the existing output. This is what about the revised output. It means 100 becomes 144. So multiplied with 1.44 times. 44% only increase happens. As only 44% increase happens, then you have to add only 44% the direct material cost. But this cost value decreases by 6%. It means you have to pay only 94%. This is what about the revised material cost. Come on, get me the value here. 16 lakhs 24,320. And in case of wages, 60% flat will be increased, which is 11 lakhs 20,000 rupees. And prime cost being 27 lakhs 44,320. And add up the factory overhead. So the total cost in this case being 35 lakhs 76,320. The company decides to earn a profit of 10% on the selling price. If selling price being 100, profit being 10, and it should be 90. Do the cross multiplication to get the rest. So this value being 3,97,369, and this will be 3,39,73,689. Hope will be now able to understand this. Clear? Another 3 more illustrations will finish up by today. It's a very simple illustrations all. If it is clear, text me. Job costing is a method of costing. Okay. I'll explain the concept of method of costing in the next class, not now. Come on, try to find out this illustration. Question number 1. The production department of a factory furnishes the following data: material used, direct wages, overheads, labor hours worked, machine hours. For a certain job exactly by the department during the period, the following data is given. This is what about the prior details. This is what about the job is supposed to carry on. Calculate cost of the job when the overheads are charged using direct material cost rate, labor hour rate, or machine hour rate. That's all. Overhead recovery rate will be calculated differently. In case of direct material cost, overhead divided by direct material. Labor means overhead divided by direct labor hour. Machine rate means overhead divided by machine hour rate. Is that okay? Overhead in the earlier case being 36,000, direct material being 54,000. Come on, tell me what is the percentage? Huh? Two-third. Okay. And what about this one? Overhead 36,000. Direct labor means 36,000. Otherwise 1 rupee per hour. And machine hours 36,000 divided by 30,000 machine hour. Otherwise 1.2. For this job, direct material. I'll just now use the direct material cost for absorption. Direct material used to be 6,000. Direct wages being 5,000. You get the prime cost. Now factory overhead. Factory overhead and the direct material cost ratio, two-third of direct material will be taken. Two-third being 4,000 rupees and cost of production being 15,000. And if I use the labor hour rate, prime cost being 11,000, factory overhead being based on the labor hour 4,000 hour and hourly rate being 1, so 4,000 rupees. You will get 15,000. Similar illustration already we have studied in overheads. We have used 6 bases for the apportionment. Here also we have been given 3 bases and machine hour rate. In this case, prime cost being 11,000. Factory overhead in this case being 1 rupee 20 paise for every hour. So 2,400 into 1.2, 2,880. Then cost of production in this case being 13,880. Now, next illustration. I will give a format here. Normal manufacturing count like this will appear. Normal manufacturing count like. Okay. Work in progress ledger control account. Work in progress ledger control account. Overhead ledger control account. Costing P&L account. Costing P&L account. And even job cost account. What you do? Debit all expenses, and once it is finished, it will be transferred. Seems to be manufacturing account like manufacturing account. All the expenses debited. Once the goods are completed, it will be transferred to the costing P&L account. During the year June 2022, the company was engaged on 3 jobs, all of which were started on 1st June. The following details are given here. Purchase of material 5,600. So, to direct material 5,600. Stores issued, stores indirect expenses like being 940. Direct wages 2,200. Direct wages. Materials valued 80 were transferred from job 120 to job 122. not required for me. Overheads for the month amounted to rupees 2,800 and overheads absorbed at the rate of 120% of the direct wages. Overhead. How much is absorbed? 120% of the direct wages. Come on, tell me. This will be transferable from overhead ledger control account. So work in progress ledger control account 2640. Here the incurrence being to bank or cash. How much will be the incurrence here? 2,800. 2,800 will be the incurrence and absorption being 2,640. Okay, cross, right? Here debit, here credit. Incurred 2,000. What is the journal entry for spending the money? Overhead account debit to bank. That's the entry here. This amount is added to the product, it's what about transfer. Work in progress ledger control account debit to overhead ledger control account. These terms seems to be pretty new, like go and finish up that video, you will be able to understand this term easily. Okay, I don't want to mesh up with all this background here. Just understand what I teach you and go and finish up watching that video, so you'll be able to understand the logic completely. Okay, 2,800 is the incurred, 2,640 is absorbed. What does it mean? Under absorption. The difference between these two is the under absorption transfer to the P&L account. Okay, directly you can transfer to the costing P&L account. How do we treat the under or over absorption? Can be adjusted to the product, another is transferable to the P&L account. So here this 160 can be transferable to the P&L account, usually to overhead under absorbed 160. Job 121 was completed during the month and invoiced to the customer at 4,200. Okay, so by sales. Sale of 121, job number 121 for 4,200. But I need to know the cost here, transferable from work in progress ledger control. See, in a manufacturing account, you debit all the expenses once the goods is completed, transfer from manufacturing account to trading account. The same happens when the job is completed, then it will be transferred to the costing P&L account. Costing P&L account. And finally, you will get the profit here. I need to know what is the cost of this goods completed, this particular job completed, cost of this job completed. We have been given 3 jobs, 120, 121, 122, 120, 121, 122. Sir, why do I prepare this, sir? I need to know the cost of production of this particular completed job 121. For that, I have to prepare that in columnar form. Right. Materials. How much is that? Direct material. 2,000, 2,200, 1,400. And stores, 240 and 700. Direct wages, 900, 700 and 600. Materials returned to store, 40. Okay, 40. And materials valued 80 were transferred from job 120 to 122. It becomes a material for this and it will be subtracted from here. It should be moved. Actually, I send the goods from the stores ledger to 120. Later on, from 120 to 122, transfer within the factory. So it may not be recorded in the stores ledger control account. Already told you know while teaching you the material costing. In stores ledger control account, transfer between the jobs within the factory will not be shown here, which is going to be adjusted internally later. So I am going to adjust this. I showed that material cost being 600 for 900 for 120. Later on, I came to know 80 rupees worth of stock removed and added to 122. So transfer. Is that clear? Yes, come on. Finish up tallying this. For 121, we will try to finish up 121 first of all. What about this? This 3740 is completed, transferable to the costing P&L account. Hope you'll be now able to understand. So this item got completed, is transferred from here 3740 to here 3740. Huh? 3000? No, overhead, I missed overhead. Come on, overhead being 120% of the that wages. 2400, sorry, 1080, 840, 720. Is that okay? Now you'll be getting this. This 3740 is transferred and you'll get the final profit 4200, 4200. The final profit in this case being 300 rupees. Now here is written 40 rupees, written 40 rupees. Stores written. Here the detail is missing, so I have not posted. So it should be here. Because this one is the total of these three, no? Internal transfer will not be recorded. Internal transfer will not be recorded. Now find out the total of rest of the two also. For 120, 4220, 4220, you get the balance rupees 4140. Similarly 122, 3500, 3500. After subtracting 40, 3460. This will be the closing stock here, balance carried on. Those unfinished goods will be in the factory itself. So this is nothing but manufacturing code you might have studied in your foundation level itself. Final accounts, final accounts, you have this topic, right? Now come on, this total being 11,380, 11,380. This ultimate value being 7,600. This is nothing but summation of these two values. Once this item also completed and transferred to the costing P&L account to find out the final profit. I request you to finish up that particular video so that you'll be able to understand this very easily. Otherwise, you can understand the logic. Manufacturing account logic is very simple. Anyhow, you just go and have the glance over the topic. And the last illustration in job costing, question number 3. Preparation of the cost sheet only. So I'll try to finish up a bit faster here. Question number 3. In a factory following the job costing method, an abstract from the work in progress as at 30th September was prepared as under. This is as on 30th September. On 30th September, 3 jobs are there. All the 3 jobs are semi-processed form. And in October, remaining materials introduced and the job is completed. Okay, come on. We'll try to find out cost sheet first of all for this illustration. Though the sum seems to be pretty big one like, but very user friendly like, you can solve this illustration. Now, what are the jobs we have? 115, 118, 120. Is that okay? Now, material. In September, how much we spend? 1325, 810, 765. These are the jobs. Direct labor cost being material and then direct labor. Spent in September 800, 500, 475. October month also some spending will be there. Then you add up these two prime cost. Then factory overhead. In September, how much spent? 640, 400, 380. And what about the October? So October month information separately given. So you have to find. See, if you are adding these three, what will you get? Cost of work in progress. Job 115 is not completed semi-processed form as on the last day of September, where material 1033.25, labor 800, factory overhead 640 incurred. Add the three, that will be the work in progress value. Now, if you further introduce the material and labor, it may be completed. By the time you can find out the cost of production also, right? Now, we'll deal with the material here. Material cost used in or spent in October. Material cost. Now, as per the requisition slip number 54, 55, 56, all are for job number 118. Go and see the stores ledger control account where requisition slip number 54, 55, 56, all the three is for job number 118. So, the overall cost will be addable for job number 118. Come on, tell me, what's the value? 1240. And 120, 665. And we still get two more jobs, 121, 124. These are the new jobs we have accepted this year only. Here 910 and here 720. Is that clear? Hope now you'll be able to understand this one. Clear? So we have posted the material cost here. Partially done in the previous year, partially done in this current year. We'll now start with labor hours during October. Wait. Material? Whatever the information, what's the value you're getting? Is this total? And labor hours during the October month is given. For 115, number of hours in shop number A 25, shop number B 25 is there. But I need to know what is the hourly rate. Before I go for that, here a shop credit slip was issued in October. That material issued under requisition number 54 was returned to stores as being not suitable. So this one is returned. Okay. I'll work out this separately here. This job number 118, for that requisition slip number 54 based item issued but returned, so it will not be includable. Yet material transfer note issued on October indicated that the material issued on requisition slip number 55 for job 118 was directed to job 124. So this item, okay, this item actually for 118, later on it is transferred to where? Job 124. So from this it is very clear, this is also now 124. So you have to consider only 515 to be considered here. Here 515. Okay, this is 910 here. And for 124, 720 and 420 both will be addable. Transfer from one job to the next job. The job from where it is transferred should be subtracted to where it reached should be added. So 720 plus 425, 1145. 1145. Clear? Clear? Apart from that, the hourly rate are in shop A being 3 rupees per hour and for B 2 rupees per hour. So 3 rupees per hour, 2 rupees per hour. So 25 into 3, 75 and 5 into 2, 50, 125 will be the value for job number 115. 125. For job number 118, if you multiply with 3, 270, here 60, total being 330. Okay. And for 120, 75 into 3, 225, 10 into 2, 20, 245 will be this value. Actually, we are not asked to prepare for 121 and 122, so I can skip this. If you want, you can prepare. Into 3, 195, right? This will be 195. This will be 60 plus 20, 80 rupees, if you want. Okay. Indirect labor will not be considered here, because indirect labor will be part of overhead, and overhead will be always added to the product using some absorption rates. Okay. Absorption rates. Now, the factory overhead is applied at the same rate as in September for job 115, 118 and 120 were completed in October. So, factory overhead applied similar to the earlier one. Assume that the direct labor being 800, factory overhead being 640. Then what is the percentage you are getting? Overhead divided by direct labor. I think 80 percentage, 80 percentage, 80 percentage. Always 80 percentage. So now also you can calculate the factory overhead 80 percentage on the direct labor. Usually nothing stated means direct labor will be the base. 125 into 80 percentage being 100. 330 into 80 percentage 264. 245 into 80 percentage 196. And in this case 195 into 80 percentage 156. Here 64. Okay. You are asked to compute the factory cost of the completed jobs only, and it is a practice of the management to put 10% on the factory cost to cover the administration and selling and distribution overheads, and invoice the job to the customers on a total cost plus 20%. So if you add up all these things, what you will get? You will get the factory cost. And admin overhead will also be calculated, which is 10% on this. This is cost of sales. You have to add the profit with this to get the sales. On cost of sales, your profit percentage being 20%. Yeah, come on. Find out the factory cost here. Add up the 3,000, 2,990. Admin overhead 10% on this being 299. Cost of sales being 3,289. On that 20% is 658, and your sales being 3,947. And here the total being 2819. Admin overhead 10% on this being 282 and 3101, and 20% on this being 620, 3721. Here 27, 26, 10% being 27.3, 2,999, and 20% on this rounded off being 600, so 3,599. And what about this one, sir? This one is nothing but work in progress, cost of production of work in progress. So with that, job and batch also over.